Hello, traders. It's 8:01 a.m. Chicago time on Tuesday, the 4th of August, 2020. Thanks for being here today and every day. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, well, this is episode number 1811. This morning, we have a market that is slightly risk off, pulling back a little bit and essentially allocating to safety. The U.S. Treasury bonds, the 30-year bond is up over a handle and two ticks. The Bund is up 50 cents. The dollar's up 26 and a half cents, and the 10-year note's up 9.5 ticks, big ticks. And then gold is up $3. Gold's trading at 1989.3 versus yesterday's settlement. The laggard today is crude. Crude is falling 68 cents or 1.7%. The DAX is off 94 and a half, and so on and so forth. S&P is down 12 and a quarter points, selling off a little bit. What is driving this? I don't know. There are several things in play, but the why is always a kind of a mental play. I'll use decent terms. Uh, it says U.S. stock futures fell as President Donald Trump's threat to ban TikTok, failing his sale of its U.S. operations, drew sharp rebuke from China, hurting investor sentiment. European equities slumped due to disappointing earnings reports from top companies. In case you haven't heard, BP, the energy company, reported approximately half the earnings versus its estimates, and it's cutting its dividend in half after a record loss and speeds up reinvention. BP cut its dividend for the first time in a decade after a record $6.7 billion second quarter loss when the coronavirus crisis hammered fuel demand, and it sought to win over investors by speeding up its reinvention as a lower carbon company. So that's what's in play. Not much else. There's also the fight between the White House, U.S. Congress on the coronavirus aid. Top White House officials and Democratic leaders in U.S. Congress will try again to narrow gaping differences over a fifth major coronavirus aid bill to help stimulate the economy and possibly dispatch new aid to the unemployed. Remember, unemployment had run out, and also protections against eviction have run out, and these guys need to do something fast. So that's where we stand currently. For the calendar, well, let's take a look in terms of earnings after the market. There isn't anything truly gigantic except for Disney after the close today. Uh, in terms of um, in terms of releases, we have factory orders at 10 a.m., about a half hour after the open, along with IBD economic optimism. We have API crude oil stock change after the close at 4:30 Eastern, and we have Kaijin services PMI from China at 9:45 this evening for those people who trade after hours. So that's where we stand. Let's take a look at what was expected yesterday versus what we got in our review segment. Keep this very short. We had a nice little pop yesterday, an impulsive move right out of balance from the prior day, and we held that, resulting in um, an overall gap. The primary scenario is a pullback. If you look at the green, a pullback and a push to, as discussed yesterday, 29.90, and then this is 29.90 and then 29.95. Here's what actually happened. There's the gap. This is RTH. The other chart was full session. We open up at the green line right here. That's the opening print at 32.83. We pull back and then push into 90 right in here. We push into 90, and we have these deep pullbacks yesterday. consolidate, and then we finally push to 95.50. So you have scenario one pretty much on the nose. However, when you look at the profile, it really is a Gaussian profile. It spent most of the session as a double distribution profile, really, but by the end of the session, it's pretty much a balanced profile. The value area of 92.75 down to 85 and a quarter is valid, and 85, this 85, 84 half area is pretty important. There's a stock zone here, as you can see in front of you with that shaded band. It's pretty important because that was the area that was left behind from the prior session as a low volume node between two distributions. In addition to that, if you look at the delta, although much of the session was spent on top of the opening price, the delta was somewhat weak as the market pushed higher. There was some selling coming in at the bid, causing the delta to be negative for the session. So as price went up, the delta stayed below. I mean, value is above the open, yet the delta was just not there. The market was very, very balanced yesterday. We have a gap, what was expected to be a gap and go situation. We did go. This is the impulse right here that was expected. That's this impulse right here, the push up, and then the grind higher. So we got almost exactly what we would expect. What we would expect out of yesterday's action, but I have to say that it was pretty toppy, pretty heavy, and the delta was not there. Remember, the delta on my charts is consolidated based on MBO data from the CME, so we reassemble the trades to see what the actual prints are. With that being said, moving forward, we reopen in the ES, right where we close, right around where we close. We reopen around the 88 area in the extended trading hours, and we have the sideways play through the Asian session, very common. And then we have this pop higher on the European Open. So the Europeans come in, we pop higher, and then boom, we tumble. And what we have done is put another low volume. So you have a low volume node here, low volume node here. Actually, let me compress this a little bit. You have a low volume node here. You have a low volume node in yesterday. And then if I take out the day session combined in this orange profile, the orange profile is the full 24-hour session or so. The blue profile is day session only. If I take out what happened in the day session, we have another low volume node here, and we have a low volume node down at the 72 area. And if you recall, there was a double top. It's marked in my master levels, which is now the middle of a gap zone, 71.75. There's a double top here as well. So right where we are currently right here, this is a key area. This was a former double top week high that we skipped through yesterday, and now we are revisiting from above. So the overnight session low at 71 is pushing right up against anticipated support. So on a virgin test, we expect to pop higher, and of course, it's paid out about 6 points so far, coming back into this zipper consolidation from the overnight session. So the overnight session is kind of divided into three segments. You have this lot up here in between 85 and 90. You have this consolidation down here, which makes up the bulk of the overnight volume. Between 85 and 70, 85 and 77. And then you have this lot down here between 71, 71, 75, and 77. So 77, 85, kind of dividing things up with 95 being the high of the prior session. Those are kind of the roadmap for today. 95, 95, 85, very important. The 85 is the over underline. and then 77 playing minor here, and then 72 is key. And then from there, we start to drop into the 64, 50, 64, 51, and so on and so forth. This is the roadmap for today, something we need to pay attention to. We want to see. So our job today is to find out. Remember, we're investigators. We're surfers here. We want to see how things are treated as the market opens and starts to trade. If it just tramples over these areas that I outlined here, if you can even read what I wrote, if it tramples through these areas, you know there is strength. If it starts to hold these areas and turn around and push through 72 down, then you're looking for 64 and 8-point range, and then hold a runner probably to the 51, 52 range for today. So overall, very, very orderly market. The volume is pretty average. Actually, let me pull something up here. 1 second. Let me just switch screens. I want to show you something that is really important to see for a second. So this is these are the stats reports that we produce at Convergent Trading. These were just updated. A few things I want you to note that are in play here that I pointed out to members yesterday. These are updated and available to members all the time. Couple things to note are the occurrence of a neutral day. So once we break one side of the IB, again, these are the market statistics reports put out by Convergent Trading to its members. The sample size is 745 days. And you've got rotational statistics up top, and then the neutral day. So once the market breaks one side, the instance of a neutral day, historical probability of a neutral day is somewhere around 68% that it will hold one side or the other. So if we break one side of the initial bounce, the first hour IB high or IB low, the probability of breaking the other side is around 32%. Very important to note. The other thing which applied yesterday, if we open above, the probability of touching prior close is 56% only, and then you have these very low probabilities of other tests. So to me, it seems like a bit of a no-brainer when it comes to how we treat the market when you're pulling statistics in. You can lean on some of these historical probabilities. The other one is if we open inside of the prior IB, then there's a historical probability of 81% that the prior IB is broken within the first hour. So if it opens within the IB, there's a high probability that it would break the prior day's IB within the first hour. These are stats that we can lean against. In over 289 sessions, if the IB high has been broken, there's a historical probability of 84.43% that price would hold or close above the mid. So if we break the IB high, we're likely to hold the mid. Another interesting one in the ES, over 745 sessions, there's a historical probability of 20.13% or 20% of price closing within the previous initial balance range. That means that when we move away from the prior initial balance range, there's a very high probability, 80%ish or so historically, that we would close away from that. I'm hoping that you're doing your own stat. There's the overnight stat, 94%. 94%. The probability of touching both the overnight and the overnight high and low is around 19%, and so on and so forth. The probability of breaking the IB high or low is 97 or 98%. I've cited that many, many times. And like I said here, the probability of an IB remaining inside of the prior IB range is only 4.7%. These are things you can lean on in terms of biases and overall statistics. I wanted to share that because that report was just updated. But in any case, what we have in the overnight session is a market that is actually lower from where it opened, with the delta being positive. So overall, overnight inventory is mixed. The overnight inventories are mixed, and we are opening in a lower portion of yesterday's range, and this is likely to set us up for, given that it's Tuesday. Given that it's Tuesday, it's setting us up for some pretty decent movement, in my opinion, as we open up. Here's the overall picture. I don't usually share this. This is my stock zone chart. The orangish shaded areas are RTH. This is 240 minutes and in all sessions. And you can see how we moved. We migrated. Let me choose a better pen. We migrated away from this big value area with the point of control at 3218 in the RTH 3217. We basically are one time framing up, just pushing higher and higher and higher, and we are looking for, looking for this 3255 area, 3250, 53, 54 area to continue the one-time framing up, and that becomes a key area to test if we break below. We've built a nice high-volume node up top. Up top, there's a fair amount of volume that held up here, and that volume is expected to be resistance today. So if any tests, initial test of 3290, I'm likely to look to sell. I'm likely to look to sell for a rotation back to 85 at least, if not lower. And so overall, we are moving away from value. We're kind of initiating away from value, and we are inside of two gaps. We have the February 26th gap, the coronavirus gap, and then we formed a gap yesterday that we have to contend with. So as we're sitting here looking at where the market is likely to open, and I'll get to my point here real quick, where the market is likely to open, which is right down here. It's trading currently at 32.77. I'm looking at this area here at 90 to present significant resistance, 84 to present significant resistance. And what I want to see is, does it push up and squeeze in which case we are again squeezing shorts, or does it repair this a gap zone from yesterday? The gap zone is between 76.50 and 67. This purple right here is the gap zone. Do we fill the gap zone in? If we fill the gap zone in, we are very likely to slide fairly quickly into 64, and then 53 becomes the big target down here. Okay, and so that's where it all stands right now. The order flow has some interesting characteristics to it. If you look at the order flow, we have 3270, which again, around that 71.75 double top area. The overnight low is at 71. It has some bids underneath it, and then there's that 65, which I just mentioned. That 65 area, which would be the key target to the short side, has some liquidity there as well, a pretty decent target. And then above, of course, 3,300 has steady liquidity, as we would expect, major strike price, a century figure, and that's where we stand today. So let's take a look at what's expected. I really need to work on shortening these. What's expected for today? So let's pull in yesterday and today's profiles to see where we are overall. So today's looking a little bit like a repair day. In other words, likely to push lower. Remember, I drew these boxes. Up here of the consolidations, the zippers that have been forming, the balance areas. We're trading right here. The expectation is an open auction that is likely to push higher, consolidate in this 3280 area, maybe make an attempt at 85, not sure, but I'm looking to find a short here on the open unless it breaches 85 and starts moving to the upper distribution. And once it does, the 90 becomes the key target there. Um, consolidates back in this zipper area, and then likely to push this 71. I expect a fight at 71, and then eventually it's likely to carry down into 64 before the bounce. This is what I'm looking for today. Again, looking for a repair day. Why did this change to thin? I don't know. Looking for a repair day. Now, if that whole scenario is wrong because buy the dippers are here, chances are it'll open in an open auction, slide down into the 71, poke through, impulse up. We get a V bottom like we've often seen in this rally, consolidate back into this 80 area and then squeeze to 85, consolidate for the afternoon, and then potentially push into 90 into the close here. That's scenario dos. All right. Those are the two key scenarios of today. Again, don't forget, we've got the 85, we've got the 90, 95, and then from there, 3,300. Those are the key areas above. Key areas below, we've already tested 71, 71, 65, 57, and then the big area to test is 53 below. That's the map for today. Okay. Good luck, and I'll catch you tomorrow. Take care.